Hello everyone, welcome to the Ichimoku.co and Forex Trading TV daily FX market review for the trading day ending Thursday, September 18th. Well, firstly to the Euro US dollar, and here we see a continuation of the trend to the downside today. The candle that we're analysing is the second last candle here, a lower high and a lower low following the breakout below the bottom barrier of that flag type pattern that had formed a congestion area here. The close down below there had completed the flag pattern, and we do have a target down below the 126 area, down below 125.84. That breakout to the downside was in line with the market being bearish in all three timeframes in terms of Ichimoku, which is what we'd expect. And with the current candle today, we've continued the trend to the downside, but we've seen a shift in momentum from the sellers for the previous day's trading to the buyers, and it does raise some doubt about whether the sellers are going to be strong enough to trade the market lower to test down to the target. We've also seen the sellers lose control and the buyers take control of the market, and also importantly a close up above the Tenkan Sen, only just, but it is a bullish close, and it does suggest there may be some potential for the market to trade higher. The problem here is, however, that in a classic way, following the close down below the bottom barrier of the pattern, we saw the market rally back up to the barrier, and now the stage is set for the sellers to come back in. That's a classic way that the market develops. So we should be watching the high of this current candle very closely. That's at 129.34, a potential change of trend to the upside with the buyers coming into the market. If we do see the market rally from here, then we do have potentially strong resistance at 129.79. Now, just looking at the Fibonacci extension, and here we see the market interacting today with the 50% level and being rejected strongly from there does suggest that there is good potential for a change of trend, and it's all about the market interacting with that level and the shift in the dynamics away from the sellers back to the buyers. So we're looking for confirmation of that, and as we trade at the moment, the market is very close to taking out the high of the current candle. In terms of our bands, and here we may have seen a significant change in sentiment in the market. For the previous day's trading, we had the bearish activity down below the lower band. We were looking for bearish follow-through to confirm the breakout and the close down below. We had a strong market to the downside here by closing below the lower band, but we didn't see that follow-through, and every time after we break out to the downside, we want to see confirmation of that. So with the buyers taking back control of the market and the market closing back within the bands, we have seen a failure to confirm the negative bias to the trend and the strong negative bias that we saw previously. There is now potential for the market to rally. The market has potential to find resistance around the middle of the bands at the 130.20 area. Whether we trade up through there today is debatable. We do have potential resistance extending up to about the 130 level, as we saw the previous swing high reach to, and we could see that resistance come into play before we trade to the middle band, and that is contingent on the market changing trend to the upside.